Hey traders, this is my weekend session, and I actually took Friday afternoon off, and I was shocked to come in and see the markets had recovered as much as they had. And it turns out what happened was there at the end of the trading day, there in Chicago, one of the option makers literally got carried off the floor. They had a margin call, and they had basically how basically are saying here, all of whom remain anonymous, lay out what happened to the VIX in the major Chicago market was caught in an infamous gamma short squeeze, which forced them to keep buying the VIX as the VIX soared, in the process ending the VIX even higher, only to get margin called out of their position by the clearing firm. So basically, there at the end of the session, we had a major margin call on the VIX, causing the VIX to collapse, and the S&P futures and stuff rallied into the close. And it's still not a healthy rally at all, and I think the markets are all broken. So I just wanted to share that with you, what happened, what caused that end-of-day rally. Okay, basically to recap, we had this blow-off top stage. We are down below that, trading below that blow-off top stage. And we had the accelerated uptrend with these fib fans. And we're trading right here between in the no man's land on this in very high volatility region of trading, trying to decide whether we were going to resolve higher or resolve lower in the markets. Based off of the information and stuff, the headlines and stuff. I personally think we're going to be coming down to the where was it at, the 2800 level. That's kind of where I'm thinking we're going to ultimately resolve. So just keep that in mind going forward here. My blue lines here, I haven't updated them for the weekend yet. These are from last week as of the close. So these will be resetting for my next video. So I better let you know about that real quick. And the blue lines represent the market maker move, the expected market maker move highs and lows, and I do need to update those. Get them; they're going to adjust slightly versus last week. Although we did pretty well finish the week unchanged, I do think the with the volatility collapsing, these are actually going to move in a little bit versus last week. Okay. So keep that in mind going forward here in your trading. A little bit might be actually seeing signs of tightening up. So basically, we in my yesterday's video or Friday's video, we came right down to the 200-day moving average and found some responsive buying there into the close. We were hovering right here until that news in Chicago came out, and we caught a nice little bid. Just basically inside this trading range that we got right here. This is still a bear flag continuation setup for Monday. So there's nothing about the pattern that has changed one iota, even despite the Friday's bounce. So keep that in mind. Things are looking really bad down here for the Russell. Let's see here. Right here down range lows. Crude was actually poking out below support lows or the support levels on the crude. So keep that in mind going forward here in your trading. I'll pull my crude up here. The 41.57 area. I got this on the weekly time frame. See, we've had 42 acting as support, and we're actually marking prices below the 42 area as of Friday, suggesting increasing downside pressure for the crude oil space. As expected, Russia came out and said they weren't going to cut production, so they are preparing for a much longer term downside for the crude going forward here. We are going to be seeing low 30 prices coming most definitely here in the next few months. So keep that in mind going forward here on your crude oil space. And as you can see, sheer panic, or they were really jacking the VIX up into the 55 area there an hour before the close, and then eventually somebody finally just got squeezed. Like I said, they were forced to liquidate their VIX positioning, and we had a responsive sell-off in the VIX into the close, which could mark a significant top for the VIX. We'll see what happens, assuming that there aren't other firms in the same situation that actually could happen too. Uh, Typically, that's an outlier event marking a top in our VIX, but that does not mean at all that the VIX is going to be coming in, especially the trading range we're in right now. Now, this is very concerning. Above 110 is basically any area above 110. You most trader investment firms and stuff like that, they're not adding to long positioning with a VIVIX above 110. And so, and actually, we are actually marketing into the Friday's close even further risk, additional risk going into the overnight session, suggesting a lot of fear going into next week. We actually were breaking below this month. You know, we only had one weekend for March, and here Friday we were breaking lows of the month. Um, you know, most of Friday's session. And if it wasn't for that short squeeze at the end of the day, we would have really been looking really bad for the last week. So just keep that in mind going forward. Here, we've already marking new lows for the month as of Friday, and you're really seeing the fear starting to set in and the volatility of the VIX. I posted a bunch of these on Slack, so I'm just gonna go through them real quick. Basically, as you can see on our um technology, if this market does want to continue with a responsive sell signal, you can see we almost always have a retrace back to this 100-day moving average on the technology. And you can just see that there is still a lot of froth up here in the technology for a proper correction in this market. So, you know, I know Trump's really trying to keep things going by all this fiscal stimulus, but this is actually a healthy reset back down to the 100 SMA. And so that is a considerable drop from here if that were the case to happen. And we're probably going to hear this week of another stimulus for the airline industry to stabilize their industry. And I don't think personally, I don't think huge stimuluses for to bail out struggling industries is necessarily what a capitalistic system should be doing, like in the markets and stuff. But you know how politics can outweigh actual capitalism. So keep that in mind going forward here. Another one, your consumer discretionary. We've had this really nice up channel for a very long time. We're just now barely crossing over that 100 SMA. So that's another one. You know, just getting back into the channel would be a nice little reset for the markets. And so, you know, we're still looking at another 10, 50. Well, you're looking at basically another 10, 15% downside move to get a proper reset in these markets, in my opinion, or on the technology side. Transports, as I said in my Friday video, this is an outright broken pattern. Once we broke this final fib fan, even in a longer, I had to go out on a weekly, even on a longer weekly time frame, we have broken a significant support zone. Uh, Not only have we broken the primary uptrend, this is a lot worse than these prior breaks of that uptrend. Much worse because we are breaking the secondary fib fan supports as well. So keep that in mind. The only thing that's going to save this is that some sort of stimulus out of the government. So you know that is the canary in the coal mine type thing. That the government's going to come in here and this will stabilize based on their actions. But technically, we should, without normally we should be coming down to this next level, and it's hard to say that's going to happen with a uh, administration like we have. Financials outright broken. Basically, it needed to hold this midline on our financials, and we are trading down below that here. So basically, I'm not even thinking about adding to financials to the long side until we can get back above the 2650 area, something like that, and get a closing print above that. Then I might actually consider it alongside. But this is uh, it's just full on panic going into the U.S. Treasuries, and until that's all that interest income for these banks is being just completely destroyed. And so I see potentially that I see the situation right here far worse than the situation on this sell off back here. So just keep that in mind going forward on your trading. That the banks are really in trouble going forward here, unless there is major money going into the bonds. It's likely going to take quite a while for those monies to roll back out. So I'm just randomly going through my charts here. FedEx in the transports, it still hasn't even hit support yet on FedEx, so that leans me to think that there's still going to be some downside pressure to open the week trading week next week. Despite that little squeeze into the close, I think we're going to open red starting at Monday. I don't think that the short squeeze into the close was actually um, uh, uh, well established buying pressure. Okay, so just keep that in mind going forward into your trading this week. And you can see the crude a little closer here. What's going on here? We're breaking down a significant support area Friday. Best chart out there Friday. Gilead. Rocket ship move. Very strong volume coming into the name. It's an established, very strong bullish pattern. This is likely to continue for some time. For some time. Just keep this on your watch going forward here. I mean, something to we have that big stimulus. They just $80 billion stimulus to find a cure for this virus. Going into Monday, really important to realize that Facebook is at a critical juncture right here. This is a must-hold zone. And we did have some news out that ad revenues are being canceled everywhere because of people not being able to do events and stuff. And it could have a major impact on Facebook and their ad revenues as well. So keep that in mind going forward here. But this is a responsive buy point, assuming the markets were to catch a bid. So just keep that in mind for your morning session. Tesla was my nemesis for Friday. Broken pattern, so I thought we were going to get continuation. Well, I got proven wrong on that one. Holding out well on the face of a very bad news tape. Had a couple bad headlines hit a Tesla, and they still would refuse to let it implode there Friday. So, yeah, I had some really good gains first thing in the morning, and Tesla took them all back. So I was quite upset. I tried Tesla 3 times and got burned all 3 times. So now my time frame's a little bit shorter here. There was a report that a Microsoft employee has the coronavirus, and so there was a negative headline there in about Microsoft, and basically we are closing right down here near the lows of session. This primary short dated uptrend, we are breaking down away from that, suggesting we're going to have some downside pressure come Monday. So this is one of my key indicators going into a new trading week that this is going to put some potential down pressure, knowing that the uptrend has showing signs of breakage. So keep that in mind, as especially since we've already put in Friday, we were putting in new monthly lows. So on the charts, so keep that one in mind here going forward. J.P. Morgan, this one here was really under a lot of pressure there Friday too, and basically we typically always get a hard test of the fib fan on any type of pullback on JP Morgan. And basically, we haven't quite had that yet. So that lends me even more credence to that we're going to have a week open Monday. And we might see what happens after that, seeing that JP Morgan doesn't seem to have a hard bottom in my opinion. I've got Micron on my watch for potential if monies do start trying to come in and supporting prices here. It's on the bull bear cross here. It's come down once already. This is the second time, and we're actually trying to poke out the second time. So typically, this might be a bullish continuation setup here from a textbook standpoint. So I'm just keeping this one on my watch if these markets are actually trying to put in a low here. And then Roku's on my watch also. This is a broken pattern in my opinion. Basically, now since this thing's broken, my next target would be the gap up. So about $70, something like that. We had this breakout. It looks like to me that Roku is a broken chart pattern, preparing to resolve much lower than where it currently is. So that is quite a bit of a potential downside risk for Roku going forward here. A quick rundown of the Friday's action. Luckin Coffee was the top seller with Roku behind it, Micron, Microsoft, Facebook, Tesla. Those were some of the top performers on the put side going into Friday. Then on the also on the put side, we had Halliburton, J.P. Morgan, ExxonMobil. These are some of the lower. It's got the same percent move, but some of the lower priced options. Microsoft. So on the put side, let's see here. And then we have similar. Okay. One last one here. Which one did I get here? Okay. And then Gilead was really the only one showing up on my call side with a lot of bullish action as of Friday. Okay. So basically, I'm going to call it quits on the video here, but I'm going into Monday thinking we still haven't hit a lot of my targeted bottoms, and we're probably going to be going back down to the lows of Friday's session. And that little responsive buy at the end of the day doesn't seem that healthy to me. With the exception, Apple is still trying to hang on by its fingernails. Of course, you know, and if you go down on the 5 minute, give me 1 second here for it to load. Okay, what I'm seeing on Apple here, you see this. This is a secondary buy point for Apple, and actually, I actually made some really good money on trading Apple right at the open this morning, or Friday morning, and I took that initial pop on Apple, so that was a really nice trade for me. But we are trying to hold this fib fan, so I'm really going to be interested to see how Apple opens Monday to decide whether or not it's going to help support markets or not. We basically had a massive short squeeze right there into the close. They are trying to use Apple to support these markets. So this one here is probably the most important stock to be watching right now, in my opinion. So just keep that in mind going forward here. What's going on? You know, basically, that's going to tell whether or not the market's going to go higher based on the type of Apple action we're going to see Monday morning. Okay, that's all I got to say. Like the video if you like it. Please leave any comments you can, what you're seeing in the markets and stuff. Like I said, I have a bearish bias going into Monday, but we'll see how things go open. We'll see if the markets agree with me or not. But as the news flow, as we get accustomed to the news flow and I think a lot of the fear is going to start bleeding off, so it's going to be increasingly more difficult to push the dip downside. It's just there's still a lot of technical patterns that truly could use better supports further lower, as I mentioned in my video.